The stock market has an 86.8% chance of being down or up for the full year if this one thing happens. Today we're going to talk about the January effect and how pre-presidential election years impact stocks. Let's jump right into this video. First, let me share some statistics with you on January, and most importantly, differentiating how this January of 2019 is different than any other year. Did you know that in pre-presidential election years, with an 86.8% chance success, the first 5 days of January dictate the remainder of the entire year? This means that if the first 5 days of January happen to see a rally in the stock market, with an 86% chance you could expect to see a continuation to the bull market for the remainder of the year. If those first 5 days are negative, then you could expect to see a downside market for the remainder of the year. In pre-presidential election years like 2019, the S&P 500 continued in the same trend that started in January. This means that whatever the full month of January does, or however January closes, the remainder of the year in a pre-presidential election followed that same direction with amazing accuracy. 15 of the last 17 pre-presidential election years have followed this pattern. Now, this is all statistical analysis, and of course in stock markets there are no guarantees. If you followed the market last year, you'll remember that we had the worst start to stock market history in the first 2 months. The stock market started to rally in January and immediately reversed, and we hit the lows of the year by the middle of February. We're going to jump into some charts in a moment, and I'm going to show you how this played out and what you could expect with the January effect. But first, let me explain to you why January is so important. In the middle of December, a lot of traders start to take losses. What that means is if you've held a stock for a long term and it's underperformed and it's a negative position or less return than the statistical average of the whole market, you may want to get rid of that loser. And why is that? You want to sell that position to crystallize or formalize your loss and be able to write that off in that tax year. But what happens if you really like that stock? Chances are in January, you're going to begin to buy back those shares. And there's even an institutional trading strategy that purchases the worst performing stocks of last year in early January, because statistically, those are the ones that are expected to outperform. But this is in a bullish market and in a market where you expect the rally to extend to the upside. This year, we might be different. Number one, we have the 7.5 year cycle, and this is a great book called Cycles. The 7.5 year cycle says that every 7.5 years, you have a recession. Since the last drop in the market of the housing bubble collapse, we've had 10 years. So we've overrun and overstretched this bull market. We're at a historic time in that it's the longest running bull market, and it's about time that we see a little bit of a pullback that's healthy and normal. So this is one of the most uncertain starts to a year in 2019 in January. So it's very important that you belong to a group of successful traders to navigate these choppy and volatile seas with. And that's what we provide you here at TRADEPRO Academy. But now let's take a moment. I want to jump into some charts with you and show you what happened to start 2018. And we can do some projection and analysis for the S&P 500 for 2019. Looking at a chart of the S&P 500, you could see that 2018 opened up on a very strong and bullish run. We made our way to the end of the month on a bullish run. Coming out of the gate, the S&P 500 rallied almost 8% or 202 points in the month of January. This selling in 2018 brought with it an extraordinary amount of volume and volatility. Markets then dropped a total of 12% in just 9 days to start the February month, and that brought around a lot of volatility which continued until May, at which point we then continued the upside trend. This year, however, in pre-presidential election years, the month of January is very important. If we take the closing prices of the S&P 500 since the beginning of October until right now, we've seen a sell-off of approximately 20%. But this may be just the beginning, and a rebound on low volume suggests we could get a continuation to the downside. We're ending this year on volatility and unusual bearishness for the month of December, and we believe the way January behaves, especially early on, will have huge impact for the rest of the year, and that's part of the January effect. All right, trade pros, I hope you enjoyed this video about the January effect, and you now understand why this month coming up is so important. If you want to learn more about statistical information on the markets, I use this book called The Stock Trader's Almanac, and it comes out every year. I strongly recommend this for any trader as a little book to keep beside your trading desk, and I'll put the link in the description below as well. Hope you enjoyed this video. Thank you guys for tuning in. Have a great start to your 2019. We've got a lot of exciting things coming for you. Please click the subscribe button and be sure to ring the bell so you get notified of our new videos. And also, if you want a free training, click here to download your copy of our free trading course where you'll learn about stocks, options, futures, and currencies. Thank you for tuning in and have a wonderful rest of your days. Good luck and good trading. Goodbye.